Today, we're shedding light on a concerning financial situation as Japan's economy faces significant challenges.
Absolutely. With the N225 index experiencing a steep decline and worldwide recession fears growing, the implications are vast.
We will unpack what this means for investors and share vital strategies to navigate these uncertain times. This is Financial Insights in Minutes, your trusted source for crucial financial updates.
Today, we'll explore expert insights stemming from Japan's economic landscape and its ripple effects around the world. Stay with us as we uncover market analysis, potential risks, and the opportunities that lie ahead.
Let's delve into Japan's economic turbulence and its potential global ramifications.
Certainly. With Japanese stock values dramatically dropping and the yen fluctuating, markets worldwide are on high alert.
The key thesis here is alarming. How is Japan's economic downturn influencing global recession fears?
Exactly. It's more than mere fears. Japan's struggles indicate systemic risks that could impact the world economy significantly.
What's going on with Japan's stock market?
The N225 index plunged more than 4%, one of its worst showings since August, driven by fears of broader economic collapse.
What about employment? Is it really that bleak?
Without a doubt, job openings have sharply declined, indicating a fragile job market. Rising layoffs expose deeper vulnerabilities.
And central banks are feeling the heat, right? What's their stance?
Absolutely. The Bank of Canada just cut rates for the third consecutive time, a move indicating serious concerns about a weakening global economy.
What does the future hold for the global economy?
There's a real risk of a global recession stemming from Japan's issues, with experts predicting a downturn in the United States by mid-2025.
Summing it up, what key insights should we share with our audience?
Japan's economic plight is critical. It foreshadows potential crises on a global scale, highlighting fragility within financial systems.
As we think about the future, what do you believe the global economy's fate will be?
Engage with us in the comments section. Your outlook could influence our next discussion.
Next, let's explore the fascinating phenomenon of the yield curve and its recent 700-day inversion, a situation not seen since 1929.
Right. This intriguing yield curve inversion signals potential trouble ahead, indicating increasing vulnerability to economic shocks. Let's examine.
What's the main message here regarding the yield curve?
The core thesis is compelling. This extended yield curve inversion serves as a warning sign of economic fragility, reminiscent of past recessions.
Historically, what can you tell us about this inversion phenomenon?
Indeed, this is the longest yield curve inversion since 1929. Historical patterns show inversions often correlate with severe downturns.
What's the deal with current market valuations?
Interestingly, the stock market is currently more overpriced than in 1929, with housing prices at a staggering 7.7 ratio to household income.
What about the Federal Reserve's predicament?
The Fed finds itself in a tricky position. Rate cuts could inflate asset bubbles, yet failing to cut may plunge the economy into recession.
What's the outlook for the stock market?
Markets appear to be pricing in rate cuts for 2024, with significant rallies historically following such declines, albeit with signals hinting at impending bubbles.
What predictions do economists offer?
Economists warn that the current environment is often a precursor to recession, with the potential for escalating unemployment mirroring early downturns.
As we conclude, what key insights should we take away?
Persisting yield curve inversion heralds economic peril. Investors must stay vigilant and prepare for significant market shifts.
As we conclude, what steps should investors take?
Keep those eyes peeled. This wave of uncertainty might be washing over us soon. What measures are you taking to safeguard your investments? Share your thoughts.
Now, let's analyze the latest market trends, from Nvidia making headlines to dark pools swaying the index dynamics.
Exactly. This segment reveals critical market movements and how today's inverted yield curve is quietly signaling recessionary warnings. Let's dig deeper.
What's the leading argument concerning Nvidia?
The essence lies in the reality that Nvidia's stocks, now under scrutiny due to governmental investigations, reflect broader market uncertainty, intensified by dark pool activity, hinting at looming sell-offs.
What's happening with Nvidia's stock?
A staggering $300 billion vanished during a recent flash sale due to rumors of a DOJ investigation. Yet Nvidia claims no subpoenas were ever issued.
What can we say about the yield curve's inversion?
This phenomenon typically flags impending recessions, and investors are certainly wary as this unfolded. Is another downturn upon us?
What should we watch for going forward?
Traders are likely to adjust strategies cautiously, anticipating volatility in response to this DOJ news. The yield curve weighs heavily on investment decision-making.
What's the main takeaway from all this?
Both NVIDIA's unfolding saga and the inverted yield curve signal a critical market ahead. Traders should be prepared for potential developments.
As we close, we're curious. How do you think the market will react to these trends? Share your thoughts.
Drop your predictions in the comments. Your perspective may be the crucial insight we all need during these market twists.
Next, we turn our focus to Dr. Marc Faber's alarming insights on inflation.
Indeed, Dr. Faber highlights pressing threats inflation poses to societal stability, informed by his extensive background in economics.
What's Dr. Faber's central argument?
He asserts that inflation transcends economic disturbance. It's a profound threat capable of dismantling societal foundations swiftly.
What does Dr. Faber say about money printing?
He points out that while money printing artificially boosts asset holders' wealth, it distorts economic stability, leading to dire long-term consequences.
How does inflation impact global inequalities?
Inflation exacerbates existing disparities, disproportionately affecting lower-income individuals while enabling wealth to concentrate among asset holders.
What future does Dr. Faber predict?
He warns of severe economic retractions driven by soaring debt levels and inflation, potentially triggering sell-offs in global markets.
What does this imply for future inflation?
Dr. Faber predicts inflation could worsen by 2025, fueling a deeper cost of living crisis, impacting low-income households.
What societal consequences might arise?
There's a looming threat of increased social unrest fueled by dissatisfaction stemming from inflationary pressures. Governments face significant challenges ahead.
Bringing it all together, what lessons emerge?
The urgent need for effective economic strategies to contend with inflation and its societal ramifications cannot be overstated, as echoed by Dr. Faber's critical assessments.
Let's boil it down to action steps. What can individuals do?
Individuals should look at diversifying assets, investing in inflation-resistant commodities, and reconsidering their financial strategies to protect against potential economic shocks.
As we close, we want to hear from our viewers. What strategies do you believe are crucial for navigating these economic crises?
Drop your thoughts in the comments. It's your chance to share insights and strategies for weathering the inflation storm.
Now, let's discuss potential emerging economic cracks with insights from Gwen Preston, VP of Investor Relations at West Red Lake Gold Mines.
Indeed, the insights she brings are crucial for any investor, particularly with climbing gold prices and shifts in economic indicators signaling an impending storm.
What is Gwen's core thesis today?
Gwen's central message revolves around a troubling economic outlook. While inflation isn't an immediate concern, she anticipates significant risks in 2025 from unsustainable U.S. spending.
What's the current situation in the economy?
Inflation rates are stabilizing around 2.6%, yet rate cuts are warning signals of deeper economic vulnerabilities, hinting at a mixed bag.
What should investors consider regarding gold?
Gold's appeal remains strong. As uncertainty rises, more investors are turning to gold as a safe haven amidst shifting economic dynamics.
What's the expectation around upcoming rate cuts?
Jerome Powell anticipates potential 25 basis point cuts, influencing market psychology significantly despite seeming minor.
What role is ensuring China in this?
China's slowdown in gold purchases may reverse as the fall approaches. Any increase could exert considerable pressure on demand, amplifying market volatility.
Finally, what does the long-term outlook for gold look like?
Consensus suggests that gold prices could breach the $2,500 mark. Investors should stay vigilant.
What predictions does Gwen make about inflation moving forward?
Inflation could reignite by 2025, heavily influenced by current U.S. spending dynamics tangled with electoral politics.
What about Gwen's predictions for the gold market?
Amid rising instability concerns, anticipate a significant uptick in demand for gold in the coming years. Eye on the market trends?
In summary, what should investors remember today?
Investors ought to adjust their portfolios thoughtfully, keeping a watchful eye on economic signals. The gold market presents abundant opportunities.
Anything else to add?
Absolutely. Being aware of the volatility ahead will be crucial for your investment decisions. Gold could be a key player in weathering this economic storm.
We want to hear from you. How are you preparing for these economic shifts?
Drop your thoughts in the comments below. Your input could create waves of discussion.
Today, we've explored critical insights from Marc Faber and Gwen Preston regarding Japan's economic challenges.
Absolutely. Marc Faber has raised alarms about how inflation could threaten societal stability.
And in a somewhat different vein, Gwen Preston highlighted how this very inflation could accelerate demand for gold.
They both do agree, though, that inflation isn't just a financial concern, it's a societal issue.
If you're invested in markets or curious about where to steer your strategies next, these emerging trends are vital to consider.
For more invaluable financial insights, make sure to subscribe to our channel and hit that like button.
Thank you so much for tuning in. And don't forget to check out our other videos where we cover additional hot topics in finance.